think we have a lot of prospects going forward. I mean, yes, we've had some slowdown, and that's been expected. It shouldn't be a big surprise just based on what we've been seeing globally, especially in Europe. We have issues with Germany and Italy. Even PMI went negative for the Eurozone last month. So it's not surprising we've had a slowdown. But I think we have a lot of positive momentum going forward. The labor market is still strong. We had the Beige Book where they came out and said, look, we're still having trouble filling spots across all industries, all skill levels. CPI is contained, so it allows the Fed to stay on a pause, at least for now. But we think they may actually raise rates in the second half of this year as we continue to have productivity growth. ISM non-manufacturing continued to move higher. So I think there's some positive momentum, even though we're going to have a little bit of lull here in the first quarter, probably second quarter. But coming back later in the year.
How important do you think it is right now that the markets are stalling out, the S&P 500 in particular, right around this 2,800, 2,815 level, and has done so 4 times over the course of the past 5 or so months?
Right, we have these levels that we keep hitting, and we don't have that catalyst to really push us past that. We've seen it in the stock market. We've seen it in the bond market as well. We've hit that 260 to 275 range on 10-year yields. We really need a catalyst to push us forward. I think the US-China trade deal will be something that can do that. Headlines are saying that we may have a deal in the next couple weeks. So I think people are just kind of taking a step back right now, waiting to see what that next push is going to be to move us forward.
All right, so there's been a debate right now about whether or not the U.S. economy is healthy. The consumer plays a big part in that discussion. We've had conflicting data over the course of the past 3 months. How does the consumer stand, and are they enough, and that strength and momentum, to carry the overall economy higher in the United States?
I think the consumer is really the foundation right now of the economy continuing to move forward. Yes, December was a poor month in retail sales, but we saw some of that come back in January. And we have to remember we had the effects of the shutdown in December. We had it in January. Because of the shutdown, we've had delayed effects in other items like tax refunds. Normally, we would see that come in February and see spending pick up. Now that may be pushed a little bit further into March. So I think, yes, we've had a tough time with the consumer, with retail, but some of the effects that were holding us back have now gone away, and we can see that move a little bit more positive in the months ahead.
Given that outlook, then, are there certain parts of this market that stand out as better and more attractive opportunities to you, given that kind of strength that you're forecasting?
We haven't been choosing particular sectors, but what we have been doing is looking at names that have had a pullback based on what we've seen over the last few months, see where we can find some opportunity of names that we think would be good going forward. We had never been in Facebook, and we added a little bit of Facebook to our portfolio earlier in the year. We added some VMware to our portfolio as well. But trying to find opportunities, whether it's going to be dividend players on a global stage or large cap names here in the U.S.
All right, just really quickly here, what's the biggest risk in your mind to the markets going forward?
I think it's just continued uncertainty, whether that's going to be from Brexit, whether that's going to be from China trade, whether that's going to be from the new budget that's come forward and the debt ceiling ahead of us. Uncertainty is going to be the biggest player in the market going forward, so we're taking a more conservative approach in both our fixed income and our equity strategies.